Hey everybody, it's Small, owner of CMS Law Firm. If you are watching this video, then you must be interested in charitable remainder trusts, because that's what we're talking about today. Before I go any further, if you want to know more about this or anything else related to estate planning or probate, you can set up a time to talk with us by going to cmslawfirm.com. You'll see a little button to set up a time to talk with us, okay? cmslawfirm.com. All right, so if you are a regular watcher of this show or listener of the podcast or whatever, when it comes to my estate planning content, then you are in for a treat, because normally I talk about sort of high level stuff. I talk about, wills and just regular old trusts, powers of attorney. I talk about sort of capital gains taxes and all that kind of stuff. I don't get in the weeds very often, but that is about to change today, okay? Here's why. A couple of reasons why. Reason number one is that this stuff is interesting to me. It is stuff that I'm working on and thinking about. Although these solutions that I'm going to talk about today, charitable remainder trust and some of these other things I'll talk about in the future, they don't apply to everyone. They're interesting to know. And so if you sort of like money, like wealth building, want to know how rich people save money on taxes and on estate taxes and do interesting things under the law to not pay a lot of taxes, then this is going to be an interesting episode for you, and the ones in the future will be as well. Today, what I'm going to try to do is just sort of break down what charitable remainder trusts are generally, talk a little bit about charitable giving, and then part two, we'll get into some ways that these are used. We'll talk about some of the specific types of charitable remainder trusts, and then we'll just see where it goes from there. Okay, so let's just dive right into this. So I think at the beginning, the easiest way to talk about this is to talk about charitable deductions and charitable giving in general. When it comes to charitable giving, there are sort of two types of tax deductions that you can get. Okay, there is one that everyone thinks about and knows about and sort of gets receipts for and things like that. And that is an income tax deduction, okay? You give to charity, you can get an income tax deduction. The income tax deduction is limited to 60% of your gross income, okay? Don't worry about how that's calculated. If you're rich enough to worry about it, get an accountant, okay? It's also, by the way, chopped down. Sometimes it's 20%, 30%, 50%, depends on the organization that you give it to. It depends on some other things, okay? That, again, is accountant land. We're not really worried about that for today's purposes. However, if you give cash, it's 100% most of the time, okay? Again, don't start giving stuff away and then come back and yell at me later. Talk to an accountant before you do any income tax planning or giving, okay? On this level, okay? I'll talk about some other income tax stuff here in a little bit. The other type of charitable sort of tax deduction that you can get is on your estate taxes, okay? Charitable giving related to estate taxes is sort of as much as you want to give, okay? And there's a reason for this. The federal government relies on your income taxes to make the country run, okay? Whether or not you think they're running good or bad is not up for debate today or tonight. I think we all generally know how it's been going lately. But they don't rely on estate tax income as much for like the running of the country. They want to encourage charitable giving, and so they do that by giving you basically an unlimited charitable deduction for estate giving after you die. Okay, so if like you have a trust or if you have a will and it says I'm giving everything to charity, you could have a cajillion dollars and you would pay no estate taxes. All that money goes to charity. It's deducted all the way down to zero. Okay, so that's the first place to start when it comes to this kind of stuff. Now, there are ways that you can do sort of have your cake and eat it too a little bit when it comes to charitable giving with charitable remainder trusts. Okay, what charitable remainder trusts really serve to do is a couple of different things. They allow you to retain some of the benefit of the money that you're going to give to charity, get an income tax deduction, a present income tax deduction, and then also reduce your estate taxes sort of in some ways as well, okay? So that's it generally. Can you tell it's already getting complicated? So I'm gonna do my best to make this sort of as uncomplicated as possible, right? So generally, these trusts are that we're talking about are called split interest trusts. The reason they're called split interest trusts is because the interest is split. There's a non-charitable sort of a beneficiary, and there's a charitable beneficiary, hence split, okay? There are two different types of these kind of trusts. One is a lead trust, and one is a remainder trust, all right? And because the charity is our favorite person when we're talking about charitable trusts, whoever gets the money first, whenever the charity gets the money, determines whether it's a lead trust or a remainder trust. If the charity gets the benefit at the beginning, it's a charitable lead trust. If the charity gets the benefit at the end, it's a charitable remainder trust. Most charitable trusts that we're talking about are going to be charitable remainder trusts, okay? What that means is you're going to put something into a trust. The trust is going to spin off income to someone that you pick, even yourself, and then after a certain amount of time, what's left in the trust is going to be given to charity, okay? That is the general sort of gist of a charitable remainder trust or charitable remainder trust. There are three ways that you can set these charitable remainder trusts up. Way number one is something called an annuity trust. The annuity trust basically says you put in X dollars, you're going to get X dollars specifically out every year for a certain term that you create under the trust, okay? It could be 100 grand. You put $1 million in, you're going to get 100 grand out for 5 years, and then the rest is going to go to charity. Every year you're going to get that 100 grand, okay? Bing, 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 bing. The second kind of trust is a unit trust. The way a unit trust works is you say, I'm going to put this money in, and a percentage of the trust is going to be distributed every year. So 5%, 6%, whatever. So you put $1 million in, 5%, you're going to get 50 grand the first year. If it's 2 million, if it grows, then you'll get 100 grand the next year, okay? So you go on a percentage. The third kind is called a pooled income fund. Don't worry about that, okay? It's too complicated. You're not putting your money together with a bunch of rich folks and distributing it out. That's sort of what a pooled income fund is. We're not going to talk about that right now because it's going to get too complicated, and I'm running out of time. This has to stay under 10 minutes so I can put it on LinkedIn, just so you know. LinkedIn folks, maybe you raise the bar a little bit so I can get a little bit more in depth. That's why we're going to have part two. That's why this is part one, okay? Now, why do we use these kind of charitable trusts? For a couple different reasons. A, it gets money out of your estate presently, okay? It reduces your total estate for like estate tax purposes, okay? Number two, you can avoid capital gains tax with this, okay? I'm gonna talk about that the next time. Just know that that's a fact. And then number three, it's a way to also receive some income and do some other interesting fun things with that. Okay, you already also get the, if I didn't say this might be number 4, you get a present income tax charity deduction, okay? So, that being said, this is probably a good spot to stop with our part 1 of Charitable Trust Planning 101, I guess, maybe. I know we got in the weeds, we got deep, I talked really fast. I'm trying to stay under this 10-minute mark. LinkedIn, you're a beast. But if you made it this far, I hope you got this. I hope you enjoyed this. If you have questions, this might be something you have questions on. Leave them in the comments wherever you are. If you're on Facebook, comment. YouTube, comment. I will see them all. Leave them. I will answer them, and then we'll be back with part 2 probably tomorrow, and we'll just keep going until we run out of parts. Okay. So, as always, if you have questions, if you want to talk with us more about anything related to estate planning or probate, cmslawfirm.com. Set up a time to talk with us free, cmslawfirm.com. All right, and as always, if you've made it this far, thank you so much. I appreciate you. I'm grateful for you. I'll see you tomorrow.